Yeah, Friday. What's up, everybody? Friday morning. Welcome to today's edition of the Daily Market Commentary. I'm your host, Chuck Fulkerson. I hope everybody had a great trading day yesterday. As we're going to do today, what we do each and every day, identifying potential breakouts and reversals from an educational perspective, looking for some phenomenal trades this morning. If you are new to the channel, do me a favor, click the subscribe button, hit the notification bell. If you're a regular returning visitor, leave a comment down below as we talk about today's stuff. Let's go ahead and dive in. So the S&P this morning. Now I will say I did not have a daily market commentary yesterday, as we had our live trade room hosted by Justin Krebs, the amazing trader, and so I didn't add any new lines yesterday. So some of the lines you're going to see are actually from Wednesday on this chart, as that was from that DMC, but. From Wednesday to now, the S&P has basically done nothing. Really, not a lot has happened, as it's kind of staying inside of this little range. And so I don't have a whole bunch to add here. You know, we have this area of demand down here, which is a pretty decent area, but it's not fresh. And the reason I say it's not fresh is because this green candle right here was an immediate retest. If everyone can see this wick right here, this was an immediate retest. And so we can come back into here, look for a potential reversal if price comes into this range. We can also take a look and see about a breakout above this 31.55 if we get the proper basing. Remember, I must have the proper basing in order to make that trade work. There's a chance that we will trade up to there, and there's room to make it up to there. There's about 30 points worth of room, which is plenty. And if you go to a 15-minute time period, you might even look at some basing right below the Globex high. Now, if we break above that Globex high, it's not like I'm sitting right below a supply area for kind of a trap. So I think it would be okay as well if we get the basing. Remember, though, that we're heading into a weekend, and we don't typically tell you that it's a good idea to hold things over a weekend, especially when there's potential gap risk, unless you hedge using options. Let's move over next and take a look at the Russell. And so when we take a look at the Russell, very similar picture to in the Russell that we have to the S&P, whereas it's in between those areas of supply and demand. Now, we do have an hourly wick over wick level up here in the Russell that we are approaching, but we're basing in front of the level, which makes it a bit weaker and a little less probability. So if you want to take that, just understand that you've got a little bit of basing here. We may get a little bit of a move away, though, for a short day trade inside of that region. Looking at the NASDAQ, same picture as we're getting in the other markets. There's some basing up above. You actually have a little bit of potential basing right here because we're basing just below this supply area right back in here. Now, this is that supply area we're basing inside, which is typically an opportunity for a breakout. Remember, basing at a reversal level is typically a good opportunity for a breakout. If we get a bit of a pullback and we come back a little bit in the overnight, there was, potentially a level down here on the 15-minute chart that we can see is this little pivot right in here at 10.11, somewhere down in that range. Moving over to crude oil. So looking at crude, we have a 4-hour level, and in our 4-hour level, we're sitting just below that supply area, which is the gap fill. And we had talked about the fact that our anticipation was eventually that gap was going to get filled, and it is just about there. Now, I don't know that I want to trade that. Let me move this over to the 1 hour. So if I go back all the way to the origin of this gap, and let me tighten this up. And sometimes, I draw these levels pretty quick, so you've got to, when you draw the levels very quickly, you don't necessarily have the same amount of, I guess the word would be precision, because I'm trying to get through a lot of these markets, and so sometimes I'll have to go back and refine those. But it looks like it's about 41.16 by 41.81, so it's a pretty wide area where we could have a potential reversal. If we get a bit of a pullback, we have a nice wick over wick hourly demand level right here, 39.71 by 39.48, that I think is a pretty decent potential reversal point if we continue to trade down. So look for that one today. Now, I typically we're now on the August contract for crude, and so on the August contract, we've also been analyzing the September contract, so I will look at the September contract as well. Although I'm mostly going to be analyzing the August going forward. If I use that September contract, same picture is right in here, 39.84 by 39.64. All right, next, gold. In gold, we had this little supply level from Wednesday, and price came back into that level. 1, 2, 3, 4, 5, 6 candles later, the market has gone nowhere, and so it gave us an opportunity to get out at break even. But doesn't mean that our supply level above was wasted, because price then came into our supply level and made a really nice move away from that supply zone. You got about a 6-to-1 reward to risk on that trade. So that one worked out very effectively. So now I need to remove that zone. And for those of you that are still trading the gold iron condors, you're doing okay. We've been talking about this for many, many weeks now, and hopefully it's sinking in. If you don't already trade these iron condors in gold, if you don't trade options on futures, what is stopping you? If you want to learn more, we've got a free class at tradersarmy.com on options on futures. Feel free to go and watch that one. It might get you started on it, because it's really been really the best way to trade these metals the last few weeks is to just trade them non-directionally as we've been chopping sideways. And I say the last few weeks, it's really been just about 2 months that we've been going sideways. Next, looking at our bonds and currency markets. So in the ZN, we had a little bit of a supply level, and this was from our Wednesday daily market commentary. Price came into that level. We got a nice little move away. We came into it a second time, and so if you wanted to try the trade the second time, 1, 2, 3, 4, 5, 6 candles later, we were right here. And so if you move your stop to break even, you're still in the trade. So if you're still in that position, I think it's now time to take your stop and move your stop down to just above this pivot right here. This is a new controlling pivot, primarily because we got below this low. So this is a new controlling pivot. And so if you move your stop down to here, you've locked in some profit. So that's a great way to manage that trade. Other than that, from what I see today, I don't see a whole lot of levels to lean on. Our demand level is still in play way down in here, but I don't see a lot of really great trade areas below where we are today. If I go to a 15-minute chart, a little bit of a smaller time period, you see a little level here, which we touched in the overnight, so I don't want to retest that area again. So nothing I want to add to this one. In the Aussie, so in our Aussie position, we are on our hourly chart rising a bit. We've come back up, but really we're basically where we were on Wednesday when I did the DMC, back to basically where we started with not a whole lot happening. So no reason to add new levels to this one either. Demand level here down below, but nothing really striking for me to want to jump right in on that trade. The euro, we talked about a potential breakdown, and we did get the breakdown in the euro, but then it kind of went nowhere. So 6 candles later, it had kind of stalled away on us. And so now we're looking at the next. I still think there's the better probability for a move down. And we're sitting right at this demand area, right? So this is a demand area, but it's a demand area that even though we're sitting right on top of it, we're basing in top of that area, right? And basing in top of that area typically means that we would anticipate price continuing to break down from that zone and from that region. So looking at this going forward, I think that you're still better off on a bearish price action. And the reason we look for that bearish price action is when we go to our 4-hour chart. Our 4-hour chart, our trend continues to be down, and we're sitting above this area here. If we're not looking at a breakdown trade, looking then for a reversal, you've got to go to a much smaller time period and look above current price somewhere to this area right in here for a potential reversal. Next, looking at Canadian dollar. So in the Canadian dollar, we have a good breakout line that's being set right here. This is kind of a line of control here. And that would be our only breakdown trade there with our supply level up above here. That's that same level that we identified earlier in the week, and it's still going to stay there. So that level is a good reversal point if price comes into there. And a breakdown below that 73,429 area. Great British Pound and Japanese Yen, you'll see a very similar picture in it to the rest of the currencies, except that we did hit our 15-minute area of demand. But then if you notice, let's put it on a 15-minute chart, we got a little, here's your entrance, 1, 2, 3, 4, 5, 6 candles later, it had gone basically nowhere. So you take your stop, move it to break even, and it still kind of went nowhere. But usually the 6-candle rule, when that gets you out of a trade, sets up for a potential breakdown, and that's exactly what we saw happen. Price broke down. So those of you that caught that breakdown trade were, I'll say handsomely rewarded. Not handsomely, you were rewarded. It's moved a little bit. But you made a little bit of a green on that, hopefully, if you took the breakdown and followed the lesson and the rules. And so now, looking at our 4-hour chart, our trend is definitely down. We're coming into an hourly demand, but that hourly demand that we're coming into has to be a confirmation because it's a counter trend trade. So that has to be a confirmation on a counter trend trade. We could get an intraday bounce that gets us back up to here for then price to trade lower. So keep an eye on that one for today. Japanese yen, don't have a lot of great levels to really lean on. We reversed off this pivot here. I think we can maybe see price break above this region here if we get basing in front of that level. So we're heading into Friday. It's the weekend. Don't allow yourself to get trapped in a gap trade situation by holding a futures contract without having a hedge or protection on it. I think that's definitely a key going in to this weekend. If you have any questions, as always, send us an email, support@tradersarmy.com. Until Monday, everybody, have a great day. See ya.